Welcome to the Multifamily 0 to 1 online meetup, where we discuss the best strategies to get started in apartment syndication.
Thanks everybody for joining. This is our 8th edition of the Multifamily 0 to 1, our online meetup. So we meet the first and third Wednesday of every month. So the idea here is getting to know a particular guest. Justin is on today, and we'd like to keep this interactive, so feel free to ask questions. We have some prepared questions, but we're really here for the guests and making sure that you have your questions answered on how you can get into your first syndication. Before we get started, I just want to remind everyone that this is an educational presentation and we're not making any investment recommendation. You should always consult with your CPA and attorney for financial and legal advice. So in terms of just some introductions, my name is Marcelo Cazini. My background is in IT and software development. I have an MBA from Texas A&M. I'm also a certified project management professional. I'm a CCIM member. I completed all of the required CCIM designations. And I've been in commercial real estate for probably a little bit over a couple of years. I own my own commercial real estate as an individual owner, and I'm also invested in several multifamily deals as a limited partner or key principal. And I've also was doing single family fix and flips before going to commercial real estate.
Claudia, you want to take that one?
Yes. We are Claudia and Martin Rubio, and we are commercial real estate investors, and we are based out of Houston. And I am a real estate professional. I have a degree in architecture, and my background in asset management comes from overseas, from the country I was born in, Colombia. I used to manage my own assets over there, and I still manage from here. Some properties we still have. And currently I'm holding an NAA certification. It's called the Independent Rental Owner Profession from the National Apartment Association. And Martin, you want to present yourself?
Sure. So I'm Martin Rubio. I'm an IT security professional. I've been doing this for over 25 years. I have a background on business management. I own my own consulting firm for several years before we moved to the States, and we've had different businesses with Claudia related to real estate in general before we moved here to the States. Here in the States, we've only worked in real estate in relation to multifamily, and actually the slide is not up to date. Up to today, we have been general or limited partners in almost 800 units in different properties in Texas and Arkansas markets, and we recently closed in our first acquisition here in Houston on a 135 unit property. That's it.
Perfect. Thanks, Martin. Justin, do you want to introduce yourself?
Sure. Justin Martinez. First off, I appreciate you guys giving me an opportunity to come on this innovative meetup group. That's pretty awesome. You guys are definitely the trailblazers with this, so pretty excited to be a part of that. So I've been doing, and we'll get into it here in a little while, but I've been doing real estate since 2003. Graduated from Texas State University back in 2003, and been obviously I've been in real estate since then, and I'll of course share with you why I decided to get in real estate. I've had the privilege right out of college to join my family business. I don't know who's familiar with the State Fair of Texas, but my dad's been out there since 1978, so born and raised there. So pretty much been watching him run a business my whole life. So jumped into that family business. We operate 4 food and beverage locations there, so it's a lot of fun. It's 2 months out of the year. That one of the reasons I got into multifamily real estate was because of this, and I'll share that shortly. So that's exciting. Multifamily coach for Brad Summerrock. I've been a part of the Summerrock program since 2014. 15, I got my first deal, and then shortly after that, Brad Summerrock, I had the privilege for him to ask me to come on as a multifamily coach of his. where I really enjoy working with the personal mentoring students of the Apartment Investor Mastery Program. So that's one benefit I love doing. I get paid for it, of course, but I just enjoy connecting with all the personal students and really watching them succeed is something that I really take pride in. And then, of course, I have my own resume and background in multifamily. Since 2015, I've been a part of over 16 deals with 2,300 doors across 6 states and 8 cities. So I've been very lucky to partner with a lot of good people and coordinate with them to see the success in multifamily across the group. So plan on continuing to grow my portfolio and focused in Dallas-Fort Worth now, but there's other markets that I'm looking into. So I love the multifamily business, and I hope to share that with you guys of why I love it.
Awesome.
Yeah, thanks,
That's
Justin.
awesome.
Mm-hmm.
Yeah, and I think one of the major treats that we knew Justin for when we just started working with the group was that he was one of the trailblazers on finding deals outside of the Texas market, right? He was one of the ones going out there and finding deals in different places with different underwriting that different than the one we're used here in Texas, things like that. So that's pretty good. So I don't know, before we go into the discussions, Marcelo, do we have another slide?
Yeah, let me just try to see here if you can respond. We're trying to see what's your experience. This is not so much of what you want to do, but what's your experience so far. So if you want to answer, if you're new to real estate, if you're a single family landlord, if you're a passive investor, I know I need to change this to multiple options, but just pick the one that best represent you so we know how to, and this is all confidential, and we are not seeing exactly who is answering what, but we just want to have an idea of our audience so we can tailor the questions.
Yeah, and we can keep an eye on what type of audience we have and how it shifts from one episode to the next, so we can craft the content in a better way to be more helpful for our audience.
All right, we have the majority here, so let me share the answer to everybody. So let me share the results. So it looks like we have one new person to real estate. Thanks for joining us. And we have a couple people who are single family landlords. The majority are passive investors right now. And we have 3 that are identifying themselves as leads or syndicators. And then I want to give everyone an opportunity to, if they want to introduce themselves, you can use the raise your hand there, and then I'll turn yourself to you. So this is just let's just do like a 30-second introduction if you want to do, let people know who you are, where you're from, what's your experience, have you invested passively, have you syndicated before, what are you trying to accomplish, how can we help you if there's anything that you need help. So let's give a few minutes to see if anybody wants to use your. All right, I have somebody that's on an iPad there. I don't know your name, but if you want to go ahead and introduce yourself. And I'm gonna, yeah, go ahead.
Hi, where's my camera? I haven't used this iPad in a long time. There it is. All right. So my name is Presley. I am new to syndication. I am not new to real estate. I work for a builder here in Houston. I've done wholesales. I've done flips. My grandparents actually started me off. They bought a few apartment buildings when I was about 3 or 4. So I've been in the industry basically my whole life. But I am new to getting deals, finding deals in this specific space. And my goal is to obviously get started, get into the first one, use the skills and the connections that I've been able to get from being an entrepreneur the last couple of years to get to that first deal and get to where you guys are now.
All right. Thanks for introducing yourself and welcome to our meetup. Does anybody else want to introduce themselves? All right, Clayton, it looks like you want to go. Go ahead and unmute yourself. And
you say Jason?
Jason.
Okay.
yeah, Jason. Yeah, go ahead, Jason.
This is Jason Ma. Yeah, so far I'm a passive apartment investor. I've invested in 3 deals, soon to be 4, closing on the 4th one soon. And I'm looking to buy my first apartment this year. I live here in Sugar Land, and just looking around here in the Houston area, looking to co-sponsor the first deal here.
All right, thanks, Jason. Welcome. Anybody else wants to introduce themselves? All right, so let's go ahead with some of our questions. Claudia.
Yes, Justin, we're gonna start shooting questions to you. So what did you used to do before starting in real estate? Do we have Justin?
You're muted, Justin. Do you want to unmute yourself?
Here we go. Can you hear me
There
now?
you go.
Yes, yes.
Yep.
So yeah, before real estate. So again, I graduated from 2003 from Southwest Texas, Texas State University. Know I wanted to get into the family business. And so again, before I really got going into real estate, one thing, and it's funny because this is very common amongst people in our industry. I was a senior year in college and I read Rich Dad Poor Dad. It changed my life. My dad gave me that book, and it's funny that he gave me that book because he worked for AT&T his whole life and learned to go to school, go to college, get good grades, and then go to the workforce. And so for him to hand me that book, his mindset was not like that. But I don't know if something resonated with him in it that he thought I would appreciate. But when I read that book, I still remember being on the couch at my house on college break reading it. And I said, you know what, I'm going to be a business owner. I'm going to be an investor. So my dad at the time, who looked at the State Fair Texas as a part-time gig in extra money, as soon as I read that book, I looked at it as an opportunity to be an entrepreneur and be a business owner. So I remember reading that book and saying, Dad, I'm coming over and I'm taking over this family business because I have 2 siblings that weren't interested at all in it, but I knew that was an opportunity. It's still a little bit self-employed, but you're a business owner. And I thought, there's no way I'm working for somebody after reading that book. And so I pretty much decided to take on that family business and do it full time. And so to this day, I still enjoy it. State Fair Texas, it's 2 months out of the year. And I had the opportunity to work with my dad during that time. And I apply some skill sets that I've learned in multifamily to that business. And we do very well with it. And but the majority of my time before I bought my first deal was dedicated to that business, the food and beverage business at the State Fair Texas.
That's like a pretty good moment in life to start, right?
Oh my God! Absolutely, I really enjoy it. Absolutely.
Yeah. So when you decided to start, how did you decide to start in real estate?
So again, back to Kiyosaki's book, right? He talks about not only being a business owner, he talks about being an investor, real estate investor. And so, of course, one thing that he pushed was single family back then. Multifamily was not even a thought in my brain. I thought single family. So what I did from the late 2003 into 2004, I was like, okay, I got to start going out some single family deals. And so I convinced my dad to sign a loan on some of these deals, which he thought was crazy. And I ended up getting into some single family rentals, rent to own. And then I was off to the races. I thought this was the way I was going to build wealth for the rest of my life. And I remember telling my CPA back then that I was going to retire at 35, and they laughed at me. And so and they said, no, you need to go work for somebody and build your 401k, because he was trying to sell me on that. I was like, no, real estate's the answer. And so did single family. So I got my first single family deal back in 2003, and I did that for 10 years and built up a pretty good portfolio. I think it was 16 I got up to. and fix and flip, rent to own, and owner finance. So
Uh-huh.
that was the start until, of course, multifamily came around.
And you were self-managing those single families.
I was, and I had to deal with, I remember, when I was still in my 20s, early 20s, I was like, oh my gosh, I just got somebody skipped on me. Now I have to go deal with it. And I remember I hated it. I hated them calling me on Sunday. I hated,
Yeah.
I hated to see the damage that was done to the property. I mean, I was building wealth still and I cash flowed, but still having to go over there and deal with it was just, I don't know. I didn't like it. And I, of course, could have got a management company, but again, my mindset wasn't there yet. And so single family, I thought that was it.
So what was attractive for you from multifamily when you learned about it? What was the first thing that attracted to you?
So yeah, the first thing that attracted me to multifamily was, so I was 10 years into this single family business, and I hated dealing with tenants, trying to pick up their rent, trying to have my assistant, I had an assistant at the time late in my career to pick it up. And I did not enjoy that part of it. And so one thing I noticed, I don't know if anybody's familiar with Lifestyles Unlimited. I went there and of course they have a single family, they have single family day and a multifamily, and you could do either one. But what caught my attention was is the economies of scale, the ability to have a management company run the day-to-day operations, and you manage the management company. That really intrigued me because I remember my business is the State Fair, Texas. I'm used to working 2 months out of the year and then I'm done for the rest of the year. And so I was trying to look for a business model that didn't allow me to slave every day over earning a living and running my business, business, not self-employed. And so with multifamily, managing the management company really intrigued me. And then it still fell under, of course, building wealth and cash flow. So that's what intrigued me. But when I first saw it, my mindset wasn't there. So it was new to me. And I don't know if personally deep down thought I could do something like that.
So did you end up having to, did you feel like to get a change of mindset, and for people who are still potentially trying to get that mindset shift, did you have to change anything in your life? Did you have to change your financial position? I mean, when you start being serious, how was that switch?
So the switch came for me was a commitment. So when I saw this business model, I knew I wanted to be in this business, not just 1 year, 2 years, 3 years, but the rest of my life. I knew that this was something that I wanted to pursue. And so when I decided to pursue the multifamily, my mindset was, I don't know how I'm going to get there. My mind wasn't to that point yet, but all I knew is I wanted it. And I had a big enough why. The single family business wasn't doing it for me. I was building a little wealth, but not at the speed I wanted. And so even though my mind wasn't there yet, I had to transition my mindset. And so with that, I had a big enough why. I wanted to do this business. And so with that, I knew I had to figure out how to change my mindset. And what's crazy, it wasn't anything in particular that changed my mindset. What it was the people, and I think everyone on this call can attest to that. That's in the Summer Rock program. When you're around this ecosystem of these talented, business people, these talented people that have graduated, school and have earned a degree in engineering and in physicians and all that, it changes your mindset. And you're around these people that are that have a passion to build wealth, that have the mindset and can articulate that that's what they want. And so when you're around these people, it caused me to naturally start to change my mindset. And so then I thought, you know what, this person puts their leg on one leg at a time, their pants on one leg at a time, and does this business, I feel I can do it too. And so that slowly started to change my mind in thinking that, you know what, maybe I can do this business. Maybe I can actually buy an apartment. Because at the time, it took a little while for me. But again, it was back to the commitment to say, I want to be in this business. I love it. I got to figure it out.
Yeah, that makes sense. How did you feel like from an education perspective? I know you mentioned that you went to some Lifestyles Unlimited web seminar and Brett Samrock. How was your learning curve? What third-party education that you decided to take, or in things that maybe you had to learn on your own?
Sure. Great question. So, yeah, Lifestyles Unlimited, the one individual that I was drawn to because of his integrity was Brad Summerrock. And so at the time I was ready to do Lifestyles Unlimited multifamily. I think there's a program for that there, but then Brad had left. And so that really deflated me. In fact, for like 6 months, I was like, I guess I'm just going to do single family again. But then I found out he was doing his own seminars and own training. And so that intrigued me. And so I actually went to, an Rat Race to Retirement. It's a 2-day event, and went to that and got to listen, to hear him speak. And, he actually, built the confidence in me just through him speaking and saying that I can do this business, and knowing that in anything in life, you have to build the education first, that piece before you do it. And with that, I felt, that was the way to go. I knew there was Dave Lindahl was a guy I was going to look at as well, but he wasn't local. I got some books, but nothing that really changed my my approach, the speed of when I was going to get my first deal. But listening to him speak, I knew that with his education model and with the ecosystem that he had and being around these people of passive investors and possible partners, I felt like that was right for me. And when I decided to do that, again, I said, this is the business I'm going to be in for a long time. It really resonated with me. And so, and then from there, when I joined, I was off to the races. There's webinars I watched every one of them twice. Like, I was committed. And that's where it got started. And it was an exciting time for my life, because it was something that was like a change. Oh my God, I figured it out. The single family business was beating me down. And of course, there's successful people in this business, right? There's in the single family business. But for me, it was just not doing it for me. And so finally, when I got this like excitement, I'm like, oh my God, this could be it. This is it. And so it really got me propelled into doing whatever it takes to educate myself and surrounding myself with the right people to be successful in this business.
Awesome. So when you felt you already had the education that you needed to start looking for that first deal, we know this is a team sport. What was your strategy for putting together that team, like reaching out to vendors and attorneys, insurance, property managers, all those people that we need in this business? What was your strategy for that?
Yeah, so my strategy then, so back then the Sumrock program was smaller, of course, and I knew I wanted to get my first deal, but I didn't want to compete in Dallas. I live here in Dallas Fort Worth. That's where I'm from. I just thought it was too competitive. So I wanted to venture out. And one of my first buddies back then was Dustin Miles, and he was buying in Oklahoma. And so I was like, you know what, I'm going to start venturing out and going to Oklahoma as well. And so that was where I decided to go to the markets. And then obviously through his education program, you have to start building relationships with these people, through the education program. You need to, find a multifamily management team that can run the day-to-day operations. I knew I need, like you said, an attorney, a mortgage broker. And so through the Rolodex, through his contacts, I was able to put that team together. But then I wanted an A team to partner with me on my first deal. And so I approached Kenny Wolf. I don't know, if a lot of you guys are familiar with Kenny Wolf. He's one of, obviously got on doing his own and very successful. And then Brad was actually one of my partners. So my first deal ever, Brad Summerrock and Kenny Wolf were my partners.
Wow.
Of course, I got the A team on my side there. So that helped, obviously. It was a 84 unit in Oklahoma City, 3.6 million and $1 million raise, with us three partnering and me, doing all the legwork. Back then that $1 million seemed like a very, very daunting task. Yeah. And I was very, optimistic and, you know, I can do it myself. So I actually told Brad and Kenny, I was like, hey, just put your name on it. I'll raise all the capital on my own. And I said, you can bail me out if I don't succeed. Well, luckily they cheered me on enough and I was able to raise the capital, the 1 million, and get my first deal in Oklahoma City. So it was a pretty exciting time for me.
Awesome.
Not only that, that was, you're not going to believe this, but first deal ever. And I had my daughter was born. But check this out.
Oh.
She was supposed to be born in September, late August, and she came out early, 25 weeks.
Oh my.
Yeah, so she was a preemie. Okay, so we were in the NICU for 84 days in the NICU. And during this time, my wife and I would go see her every single day and be with her. And you know what I had to do during that time? I had to raise capital for this deal. So I'm out in like the hallway calling investors, you know, and like calling, you know, hey, you want to invest in my deal? And then I'm running back in, checking on my daughter. You know, after I got through with this, the 84 days, keeping an eye on her with my wife and then raising $1 million. Once I did that, I was like, you know what? I can do anything. Everything's gonna be peanuts compared to what I just went through. So that 2015 was a very interesting time for me. But you know, at the end of the day, we prevailed and we got through it. And you know, now here we are, and she's 4 years old and very healthy.
Awesome.
That's awesome. That's a great first deal story.
Yes.
With all the excitement that the first deal brings, but you have some additional stories around it. That's great.
Yeah.
Now, to get to that first one, based on the markets that you were targeting and all of that, how, like, for people that's just starting out and they're thinking about finding that first deal, how much effort would you say? And I know the market has changed quite a bit since then, but how much effort do you think you had to put in? Like, how many deals did you go through before you found that first one how many offers did you put in?
Sure.
How much effort do you think you put?
So I think I put 4 offers in, and everybody's like, oh my God, you know, why aren't you, you know, touring more deals? Why aren't you putting more offers in? But being a coach with Brad, and then of course listening to Brad, you guys were at R2R. One thing that resonates with me with him, he's like, hey, I want to get this size property. I'm going to go get it. And so when I went and started touring deals, that was my mindset. It wasn't going to take me 100 deals before I got my first deal. I was going to find one that I wanted, and I was going to do whatever it takes to get it. And, you know, obviously with the right underwriting and all that. And sometimes I think people take too much time analyzing deals. Does this work? I think you find one that you really, really like. You don't get emotional about it, but you're like, you know what, this is the deal I want. And you make it happen, and you figure it out, and put your best foot forward and put an offer in. Instead of analyzing 100 deals, how about we take the time to analyze 5 and really dig in and do the legwork and dig and get in the weeds to these deals and try to uncover opportunities that others that are just looking at the surface are not. And so with that, I think you define your criteria, and then you go to work and you narrow it down to so many and get after it. And you might not be your first deal, first attempt, second attempt, third attempt, but I don't think it'll take 100 times to get it. I think you'll get it sooner than later.
That's very smart.
Yeah, cool. And before the next question, I wanted to remind everyone, if you guys have any question at any time, feel free to write it on the chat or just raise your hand and ask the question. Just a reminder. Go ahead, Marcelo.
And Jason, let me just drill down a little bit on what you just said there. So do you still feel that like for someone that, for example, is starting now and they're trying to get to their first deal there, do you still feel the same way as you felt before about analyzing deals deeper versus having a large volume given where the market is now?
I do. I think you focus in, right? You define your criteria, which of course in Brad Summerlock's program, you know what that is, how to do that. You define your goals, define your criteria, and then you focus in on that particular criteria. So part of this criteria could be the market. Well, if you're in the market long enough, you're going to find opportunities because you're going to become a specialist. If you think about it, once you own a deal and you are running that deal, you're going to know all the ins and outs about the sub-market, how much rent you can get, what the expenses are. So what happens is if there's a deal right by, who do you think's the most knowledgeable about that particular deal? The owners around it. And so if you don't have a deal yet, well, how are you going to do that? That means that the way to get there is through to specialize in that particular market. It's 70s or 80s product, whatever it is. If you take the time and dig in and get a good understanding about what's going on in that particular submarket, what are rents like? What are the demographics? What are they like? What makes them pay more rent? What kind of additional other income opportunities are there? Expenses, same thing. Really focus in with your management company and getting an idea of what those look like, those line items. And so the more you specialize and focus in on those little, get in the weeds, like I like to say. Once you get in the weeds with that information, you become more of a specialist. So now when you're competing with others that are going against you, you're going to have that slight edge. You're going to know that you can bump up rents a little bit more than they can, or there's another business, there's another opportunity to do a certain type of upgrade, or another other income opportunity. And so the ones that are just on the surface doing just a generalization of underwriting and going at it that way and looking at it and saying, oh, this deal doesn't work, you're going to beat them out. And you're going to know that there's some additional opportunities. So I think just focusing in on that, specializing on that criteria will allow you not only to look at less deals, but it'll allow you to win deals as well.
If you compare, I'm sorry, Marcelo. I'm just,
no, go ahead.
I just came up with a question that follows up with what Justin was saying. If you compare how long it was taking you in that time, back when you started, to take a deal, was it easier or faster before? Because that was a different market. I mean, the market was different by then. So is it still a little bit harder now, or do you think it's the same once you focus?
Yeah, it was hard back then because
it was hard back then.
Of course, because we didn't know, like, think about it. We don't have a crystal ball, right? So, looking in Dallas, for instance, back then, we thought $50K a door was high. So it was like, oh my gosh, it's so competitive. They want $50 a door. And can you imagine if we just bought up all the deals back then, $50 a door? But of course, we don't have a crystal ball. So we're all in the same mindset and competing. And so, thinking about it now, and thinking about it then on if it was competitive, I think it's always will be competitive no matter what. And so, again, I think it just boils down to those things I talked about, a focus, specialization. So yeah, it was hard as then as it is now. Trust me.
That's encouraging. So when you got your first deal, what was a particular thing that was interesting for you on that first deal?
The first deal, as I look back now, I realize how much I didn't know. It's crazy. Like, I mean, really, like, to think about how much knowledge I have now compared to back then, I'm like, oh my gosh, I wasn't asking the right questions. I wasn't doing the right thing. And of course it was in Oklahoma City. I live in Dallas. So I would go down there once a month and drive 3 hours to check on the property and things, to see how things are going. And how I ran the business then was totally different than how I do it now. And so, but I'll be honest, like back then when I got my first deal, and I'm sure you guys are like this, it was just like, oh my God, I own an apartment complex. This is so cool. Like, I can't believe I did it. Like, you actually hit your goal. But the thing, the more I look back, the more I think, oh my God, I could have known so much more. And that's what's amazing about the ecosystem, right? I know I keep talking about it. I'm not selling anything here. I don't get anything for it, but the Brad Summerrock's ecosystem, being around these people, it's like a mastermind. So every time you're around them, you get like these little tidbits of like, oh, that's a great idea. Oh my God, like should try that. And as well as me being a coach, you know, it's funny. Everybody's like, I'm coaching them on stuff, but every now and then I'm getting some good stuff from the student as well, of like, oh, that's a great idea. So it's like a big old mastermind.
Yes.
And if you're going to be successful in any industry, getting around like-minded people that are in that industry is what helps. And so it's just crazy to think how that back then, how my thought process was and how it is now.
Yeah. Awesome.
Yeah, that makes sense. Presley, it looks like you have a question there. Do you want to go ahead and ask your question?
Yes, I appreciate that. So, going into your first deal, was it Justin? Going into your first deal, Justin, I'm sure that you did as much research on understanding the industry and what to look for and how to calculate the numbers and make sure it's a good deal. But you said it was harder than, which I understand. What would you do different? What would you go back and tell yourself on that first deal? Hey, it's good that you're going to Oklahoma once a month. Would you tell yourself go more, or what changed in your mindset? What would you do differently now that you know versus then on that first deal?
So it's a couple things. One is industry data. So all the 16 deals I've been a part of, the one that has not, this is crazy. The one that hasn't performed like it needs to is that one. Isn't that funny? My first deal, we haven't, yeah. And we were a lot different back then. And so industry data is critical. And back then we didn't necessarily have access to it like we do now. And what industry data includes is, population growth, job growth, historical occupancy, projected rental growth, things like that you learn in this business. And back then we just, just kind of thought, well, let's underwrite it like we do Dallas. And you're probably wondering like, well, how do I learn that? Well, that's where the education piece and having that ecosystem in place and helps you with that. Like you're not alone in this business. It's a team sport. And so that's one thing, industry data. Having access to that would have been helpful. Then secondly is, of course, the purchase part is important, but knowing how to manage the management company and what questions to ask, right? And so my knowledge in that has increased, 100 times. Being on that, being on a weekly call, going there once a month. Again, we're not micromanaging the management company. The reason why we're in this business is that we have freedom to, travel and do things with our family. But that doesn't mean that you're not, managing the management company correctly and asking the right questions. And so back then I didn't have those skill sets that I have now. And so again, with the Summerrock program, that mastermind has increased. And the more you're in it, the more, coaching and networking you do, the more you sharpen your skill sets with that process. So back then I was very green in regards to asset management and managing the management company. And I thought I could just do it because I ran a business, but those are all skill sets that can come through just educating yourself, through networking. And so one thing that I took from that is it really, like, a couple years into it, my ego got hit. And I was like, oh my God, what am I doing wrong? I don't, these deals are doing fine that I have. Why is this one struggling? Why can't we hit the numbers? And by the way, we're not going to lose money. It's just not hitting the projections. But again, my ego was hurt, because I was like, oh my God, I must be a terrible asset manager. And so I made another commitment. When I first started this business back in 2014, I was like, I'm committed to doing multifamily real estate. Well, a couple of years ago, I'm saying, you know what? I'm committed to learning how to be the best asset manager I can be. And so through that process of making that one of my goals, of course, once you set a goal, then the answers start coming to you, right? You can't hit the goal. You can't hit your goal if you're not focused on it. And so that was one of my goals. And so then I became more skilled at it. And let's face it, it's 10,000 hours makes an expert. So with anything you get into, there's going to be some bumps, and you just got to get through it and prevail and continue. So that was a great question.
Do you still have that deal? Do you still?
We do. Yes, we do.
Wow.
So yeah, still have it. So Kenny Wolf, actually, he owns part of Allied. And so he bought a couple more deals by that property. And so naturally, it made sense for him to be the asset manager on it. And so that's one I've handed over to him. And he actually, him and I communicate from time to time on it. But, one thing about, being in a partnership, you got to understand who has the best resources and capability to run the business at a high level. And so, of course, I asset manage a lot more, other deals, but it made sense for us to do that. So we still have it. We're open to sell it this summer, and we'll still make a return to our investors. But again, we were hoping to hit a certain, cash on cash return, and we didn't get there. But again, if it's, one out of 16 is not too bad.
No, and the appreciation has, I guess, it has helped a lot.
Absolutely.
Yeah.
That's where, yes.
Yeah. Great. So what is your best advice for someone who's trying to syndicate their first deal?
Yeah. So I think first off, I think it's before you even just get to that point, I think it's important to commit. Remember, you've been hearing me all, the last 20, 30 minutes. It's about commitment. There's a lot of different ways to earn a living, to build wealth. But I think all of us agree this is one of our favorite ones, but it's a commitment, right? It's a commitment to say, I'm going to be in this business. This is how I'm going to build my wealth for my family, for myself, for career. And so being committed to it is number one. And then, advice, whatever arena you're going down, if this is it, syndicate your first deal, you need to start getting around the people that are in this business, that have done deals. The more you're around it, the more it becomes normalized, right? And then it's like, you know what, I can do this business too. And then, of course, the education piece. The education piece is critical. Whoever you use for that education piece, make sure they're credible, that they've done it, that they're successful at it, and it's easy to understand. So the education and networking is the top two things. And if you're in that, if you're committed to the education and you're committed to networking, naturally what happens is it becomes a part of you, and then you eventually will start feeling comfortable trying to go after and get your first deal.
I will add focus. Focus and commitment. I think those are the strongest words for starting and keep going.
Absolutely.
Yeah.
And to add to that, I have the privilege to coach a lot of different students, and I get asked what makes the difference between the students that become successful that you coach and the ones that don't make it? Let's face it, not everybody's going to get a deal. It's 80-20 rule. And it's funny. It's not, that the person that is smarter that gets a deal. It's not that they're more connected. It's none of that. It's real simple. They're committed, and they go and they get to work, and that's how they get their first deal. I've never seen a student that is just well connected and smart just because of that get a deal. It's just that they were the ones that have been getting deals had no advantage. Trust me, had no advantage over others. They just said, you know what, this is what I want. I'm going to put in the work, the commitment, and I'm going to figure it out, use my resources with my coach and the networking, and they make it happen. So that's the secret formula.
True.
Yeah, that makes sense. We do have a question from Rafi. Do you want to go ahead and, Rafi, ask your question?
Yes. Hello there. So I have a kind of a two-sided question to it's the same question, but I'm curious from both perspectives. So what are like some red flags that you would look for in a pro forma or a deck? Both from an investor side, if I'm looking at a deal that I'm curious to invest in, and also from a syndicator side to avoid any problems and to make it as attractive as possible to investors.
Sure. So yeah, if I'm a passive, or let's just start with the syndicator part of it. So the syndication part, that, you know, the things that I'd be leery of is an incomplete T12. You know, I would, we're basically buying a business, and the more that it's incomplete and the financials are not complete, the more, you know, I'm concerned, and I'm not going to go down that arena. Typically we're buying stabilized properties, 90% or more. And for a newcomer, that's a no-brainer. You have to do that. Maybe when you've been in this business 5 years, have 3,000 plus units, you can start looking at deals that are unstabilized, less than 90%, and looking to bring them back to life. But for your first deal, you know, I'm looking for, you're buying a running business that is cash flowing and making income. And so first and foremost, I want to make sure that property is doing that, and that they have complete financials, and I'm able to review them. The OM, the offering memorandum, like you mentioned, you know, first, it's all fluff. I mean, we take it for what it is, and we look at it, and we put it into the spreadsheet. But again, when you start verifying this information, I want to make sure that there's complete financials. Another thing that's a red flag for me is the submarket. You know, we talk about household income, right? Household income and the submarket, what's going on there is critical. If you're getting in the submarket with a very low household income, you know, there's liquor stores, you know, around the street, it's run down. You can, no matter how good the numbers look, you can expect a lot of turnover, a lot of problems, a lot of crime. And so that's one thing I look at as well. And it goes into even being a passive investor as well, that, you know, you want to get into a submarket that not only has strong household income, has strong demographics around it, has strong businesses around there, like Targets and Starbucks and things like that, and not, you know, not liquor stores and things like that. You want to stay away from that. So that's one thing I definitely look for. And then, you know, again, to continue with the passive investing side is the aggressiveness with, you know, this could be a whole hour session, this topic. But, you know, if you really want to hone in on maybe 3 things that we like to look at within the Summer program, are the industry data information, which is rental growth, stable economic vacancy, which I'll define that in a minute, and then cap rate. Okay, reversion cap rate, what they think they're going to sell it for. And so on average in the United States, the rental growth is 2%. Okay, so if they come in and you see 5% across the board on rental growth every year over year, that's obviously a red flag for me. And then I don't want to get too much in, to the education piece, but economic vacancy. And so, and just to share with you what economic vacancy is, the definition is of course vacancy, right? Vacancy, bad debt, which is, tenants not paying their rent, loss to lease, and concessions. And so I'm not going to get into definitions of all those, but in Dallas Fort Worth, for instance, or Houston for that matter, if they have a 10% less than 10% economic vacancy on the back end of their deal, that is a red flag for me. I want to dig into that and look more. And then of course, the last thing is the reversion cap rate. Things are trading right now in the markets at between probably 5.5 to 6% cap rate in Houston and Dallas Fort Worth, and maybe a little less. But do we expect the market to be this like this forever? No. And so if you're looking at a deal, and this is deals outside the Summer Group, because we obviously are, keep our underwriting pretty, conservative based on historical data. If you're looking at a deal outside the group and they're showing, a 6 cap on their reversion and it's a C class property, that's a red flag. You want a little buffer. You want to keep historical data into perspective. And so what we like to do is add about 100 basis points, 1% on top of what things are trading for. And so if things are trading for, like, say, for instance, a 6 cap, we might use a 7 cap for just a real quick example. So you don't want to go into it expecting that things are going to be this good forever. You gotta have the approach that, things are going to slow down. Let's take a more historical approach. and make sure, we're looking at this from a long-term perspective. So hopefully that answered your questions.
Yes, thank you very much.
Ram, do you want to go ahead and answer a question? I know I have a question too.
Yeah, sure. Justin, I think, thank you for your story. It's very inspiring, for some of those that are just starting, And I have a question in general on, I guess, the coronavirus and the recession and what kind of impact it might happen on the multifamily.
Yep.
I think with
Hello?
Ram, do you want to repeat your question?
Yeah, so did you hear me? Yeah,
No.
yeah, I said, with the, coronavirus going on and, the stock market going down, so what kind of, impact that might have, if a recession comes on the multifamily?
Yeah, so as far as the economy is concerned, that's a great question. Can you guys see me? I got to switch accounts here. Hold on, let me stop this one. Hold on 1 second, guys.
Mm-hmm.
Can you guys hear me?
Yes.
Yeah. Yes.
Okay, great. So yeah, in regards to, the coronavirus and the recession that's coming in, I think it goes back to what I talked about before, is the ability to understand historical data. And when we underwrite deals, we keep that into perspective. And so we're not going to get too aggressive. So when things slow down, things are going to slow down. And when they do slow down, we're going to be in good shape. So I talked about those industry data, that industry data that I was referencing: rental growth, economic vacancy, cap rates. And so if things go as they are, we'll be selling our deals in 2 years and doubling our investors' money. If things do slow down, we're still going to be in fantastic shape. We're going to have long-term, very low interest rate, non-recourse loans. We're going to have a model that's 4 to 7 years. And we're going to be able to sit out any recessions. And then again, remember I mentioned we're putting 100, 150 basis points above what things are trading at now. And so as long as you're a passive investor and syndicator and you keep that industry data, historical data into perspective, we're going to be in good shape. If we have a 10% cash on cash and then we end up getting 7% returns instead of the 10, that's fantastic. But again, I'm concerned for those out there that are not following some good guidance. So obviously I'm biased to the Sumrock program, but the guidance that we give to be conservative, I'm concerned that they're going to be, people are buying deals as we speak that are way aggressive, and they're going to be holding the bag at the end of this thing and going to be in trouble. And so that's why it's super important to be around an ecosystem, a group that is underwriting conservatively and keeping the more, like I said, historical data into perspective.
And
so far you're not.
Go ahead, Ram. Sorry.
So far you're not seeing any slowdown there in the market, Justin?
Oh, no. The market's fantastic. There's no slowdown right now. Things are really humming along, especially in Dallas-Fort Worth. Dallas-Fort Worth on its own is doing real well. The things you want to look for, again, is if you're watching, if you're watching market reports, you want to see job growth, population growth, and the supply of multifamily. You want to see the supply of multifamily, obviously of affordable housing, low. And so it's very difficult to buy or to build affordable housing. If you notice, the new builds are more A-class. And so as long as you have that mix, right, the supply and demand, the demand continuing to increase through population growth, right, and job growth, and the supply, of course, being checked with affordable housing, you always will have demand. Regardless of the economy, people need to live somewhere. And typically in a bad economy, they're more renting than they are they're buying. So we're in good shape.
Cool. Thank you.
And just one follow-up question on industry data that you mentioned a few times for the folks who are new. What are your some of your favorite sources for industry data, and are they free or are you paying for some of them?
Are you muted?
You might be muted, Justin. We can't hear you.
Yeah, we can hear you. We can't hear you, Justin. Can you hear us?
So did we?
Hey, can you hear me now?
Yeah, we can hear you.
Yeah, we can hear you now.
Can you please repeat the question?
Yeah, so the question was just a follow-up on, you mentioned something very important about industry data and making decisions based on industry data. And for the folks who are new, what are some of your favorite sources for industry data, and are they free or are you currently buying some source of industry data right now?
Yeah, so the best sources, of course, is CoStar. I mean, it's a paid resource. CoStar and then Yardi Matrix. Those are two of the best out there. If you obviously have the budget to be able to pay for those are probably the best to go to. A couple free. This is good. You can get a lot of free information out there. ALNdata.com is of course a good one to go to. That provides really good information as far as what's going on in the markets. And then one of the best resources is brokers, is the mortgage or the brokers out there, the companies, right? The Marcus and Millichaps. You can go to marcusandmillichap.com, Berkadia.com. You can go to ARA Newmark. They have a ton of resources, and they spend a lot of money on these reports, figuring out not only what's going on now, but what's going on, what will be going on in the future, what their prediction is. And the reason why they spend so much money is because when they market their properties, they want to make sure they have real information that they can provide to investors. And so going to those websites and doing research and going to certain markets you're interested in, you can get a lot of information from those free resources.
Great.
Yeah, I would add that it's really important to do that, because it's really easy to Google or to find information on the current status of any market. But the information that's coming from CoStar or Yardi, or even the reports from Marcus and Millichap and CBRE and all those market studies, it gives you historical information, so you can look the past 5 years, the past 10 years, and that's what's going to really give you an insight on what could happen with your property, like what happened in 2007 in that market when the economy slowed down. Those type of things are going to help you make a more educated decision when you're trying to underwrite your own deal. That's really good, Justin. Thank you.
All right, so we are a little bit past the top of the hour. I just want to open up. Anybody else has any additional questions? As we've, all right.
Yeah, thank you, Justin. I think it's very inspiring to us.
Yeah,
Appreciate that. Yeah, and if anybody has any additional questions for me afterwards, you can always send me an email, and I'll be happy to ask. I love helping others, regardless if they're in the Summerot group or not, and have questions. And so, yeah, there's my email right there. So you can always feel free to reach out to me by email. I'd be happy to answer any questions you guys have additionally beyond this online meetup.
Yeah, and I'm sure we could stay there with you a couple hours.
I
know you're driving, and I know we only scheduled this for 1 hour, so we'll probably have you back hopefully when we have 100 attendees instead of 25, and you have $5,000 instead of 2,300.
Yeah, I look forward to it, guys.
It's been amazing.
And I just want to mention for the folks who are new, again, we meet the first and third Wednesday of every month. So our next meetup is going to be the third Wednesday, which is March 18th. And for that meeting, we really focus on getting your first passive investment. And then we're back again on the first Wednesday, which is going to be April 1st. And again, for another edition of how to be a syndicator and get your first syndication.
Thank you for watching this week's episode of the Multifamily 0 to 1. Join us live the first and third Wednesday of every month.